Hey, what's going on, guys? This is Ryan, also known as Cantor and Clark, and this is going to be a BlockRoots production. So, Josh and I a while back got together online. We were talking about some of the things that we thought were lacking in the space, some opportunities we saw, and in the very near future, we'll be releasing something that we've been putting a lot of work into that we think will bring a lot of value to people from all levels. Okay, so from seasoned traders to newbies. It's going to be a phenomenal resource, and we're really excited to bring it to you. But this video is going to be in regards to Bybit. So we did an article recently on the advantages of using Bybit over the other exchanges. It's become kind of a meme lately in crypto, the whole BitMEX overload error. And as the market picks up and volume picks up, volatility increases, causing server overloads, or rather engine overloads, is not really acceptable in my opinion. So Bybit has 100,000 TPS, so transactions per second. BitMEX has 500, so they kind of blow them out of the water. So Bybit can handle all order types during any period of heightened volatility that you can imagine. So Bybit takes the gold in tech. Bybit, to me, looks better. It's a trustworthy exchange. Okay, they're completely anonymous, no KYC required, based out of Singapore. Very crypto-friendly place, great team, some ex-Morgan Stanley guys. If you're worried about privacy, you could get a great VPN from Surfshark. All right, we recommend them. I give my approval, my thumbs up to Bybit. I think that it is far superior to the other exchanges. I think that the complaints about Bybit were a lack of liquidity months back, and during the bear market, there was kind of a lack of liquidity everywhere. But right now, it's just a matter of people signing up and seeing that Bybit has more to offer than the other exchanges. So the Bybit edge is the transaction speed. Okay, the Bybit edge is the fact that it makes things a lot easier. Okay, it groups things into one form rather than having to do multiple steps to actually placing an order. And I'm going to get to what I mean by that in a second. So the usefulness of leverage, rather than just using it to really increase our profits, which a lot of traders are geared towards using it for, is the fact that it helps us mitigate for counterparty risk. I could basically put just a portion of my Bitcoin onto this exchange. As you can see with this testnet, there's basically a tenth of a Bitcoin. I could represent a whole Bitcoin right now by using 10 times leverage. So I'm exposed to all the upside that a whole Bitcoin would get me in terms of upside movement, but I'm also exposed to the downside because I'm trading on the notional value. So this is really important to understand, because as you increase your leverage, the amount that price can move adversely against you decreases. So 100 times leverage, we spoke about this in the article, 1% move basically liquidates your position. Because think about it, if you're using one Bitcoin times, say you're using it times, we're just keeping the 10 times leverage as the example. If you're using one Bitcoin, okay, 10 times leverage long, you're representing 100,000 contracts, okay. If you move down 10% off of that 100,000 contracts, that's 10,000. So it would liquidate your position for a 10 times long, a 10% move liquidates your position. All right, so it's really important to understand these liquidation levels. When you place an order on Bybit, you see your liquidation level immediately, and your stop should always be well before this point, and you should always use a market stop. So we talked about that in the article as well. So when it comes to the futures exchanges, these are peer-to-peer. So what they install is basically a mechanism such as a funding rate. Well, the mechanism is the funding rate, and the funding rate incentivizes traders to take the opposite direction, the opposite direction from the majority of people. So if the majority are leveraged long, the majority are going to be paying funding to the shorts. So what this does is also incentivizes, okay, it incentivizes people to take the opposite side of the trade because they get paid to do so, okay. So if the majority are long, the shorts get paid, okay. And it incentivizes the people paying the actual funding to close out before funding. Okay, so what happens is the whole purpose of this mechanism is to keep the futures price close to the spot price. All right, so there's no real basis between them. So this is basically a mechanism to keep these two in tandem as close as possible, because you have to remember that the futures price, this is delta 1, this is a derivative of the underlying, so the spot rather. Okay, so we have to keep the futures price close to the spot price. Okay, so this is going to be useful if you're thinking from a games theory perspective. So if everyone is paying a ton of funding and they're all and price is well extended, okay, what's the likelihood that before the funding expires, if people are paying a large amount of funding on a large amount of their notional value, that they close out all at once and the market experiences a spike in volatility, because they could close out and then they could get long again and not have to worry about paying this. So this is something to think of. Okay, so mitigate for counterparty risk, okay, to capture more upside, to be able to take both sides of the market. So spot exchanges for the most part don't offer the possibility to short. You could use the futures as a hedging mechanism, okay, for your underlying spot, okay, or for your spot allotment rather. But how to use this platform if we're placing a margin trade, that's really important. So one thing that's really important that people are worried about is, okay, I put my Bitcoin onto the exchange. It takes a while for it to come off of it because there's only openings in 8-hour intervals where people are allowed to take their money off the exchange. Okay, so these windows of time are when your order gets processed to leave the exchange. So what happens if Bitcoin is crashing between that period? Well, what you can do is you could short your entire position, okay, value at 1 times leverage. Okay, and what this does is basically converts your money to synthetic USD. So without getting into detail about how that works or how convexity works between leverages in terms of shorts being liquidated versus long being liquidated and getting into all this, this is the way that you protect your USD value, okay? So if price moves up when you're shorting at 1 times leverage for everything, you're not going to lose money. You will lose money if you're paying funding and the market is moving sideways because it's perpetual, right? This is not a futures contract in the traditional sense. These are perpetual swaps, okay? So you just can pay the funding fee, all right? So this amount of money on your actual margin should be negligible, should give you enough time so that you do not, experience a dramatic shift should the market take a drastic change in direction, okay, that would adversely affect you. So you can short at 1 times, okay, leverage, all right? So that is how you convert to synthetic USD. That's basically how you turn your, your Bitcoin or your USD on this exchange into a stable coin, all right? So that aside, so now that worry is aside, okay, the thing that I like most about Bybit, okay, is the fact that it streamlines the entire process of having to place an order, place a stop, place a trailing stop, do all of that, okay, into one thing. So for example, okay, if I'm going to place a trade right now, one feature that allows me to utilize is this slide bar right here. Okay, so this slide bar is really important because other exchanges I could pick the price off of the book easily to adjust it right here. All right, you can see how this changes over here. I could pick that, okay, I could type that in, or if price is moving erratically and I want to catch it, say it's coming down to support, all I have to do is slide this, all right? So all I have to do is slide this. So if I'm expecting price to come back down right here, okay, let's say I am going to be trading on behalf of that 1 Bitcoin, so I'm using this value right here, okay, at 10 times leverage, okay, so let's say my order price in that case would be $10,000. Okay. Whoop, that's incorrect. Order price in USD. There we go. Okay. Now quantity at 10 times. Okay, there we go. Okay, 10 times leverage long. Okay. Right now we have our available margin is basically 1/10 of a Bitcoin. This order value is actually, yes, this order value is almost a Bitcoin. All right, so but I'm going to wait for price to come down. I'm going to use a limit order, okay? It's just for example's sake, and I'm going to wait for it to come down to basically $11,000. So I'm going to move this $11,000. I want to buy my order. I want to put a stop on it too, though, and I want to put a take profit on it. So I've set these parameters. I've set my leverage, okay? Now I'm going to buy long, okay? It's going to prompt me with this. Okay, this is going to show me based on my leverage what my liquidation price is. Okay, so my liquidation price is $10,000. All right, basically $10,000. So $10,049. Okay, so price has to move basically 10% down from where it is right now. It shows me the distance right here. Okay, I don't have a stop loss in place. I don't have a take profit in place. I don't have any of that in place right now. This just shows me all of the order details, but I want to put those in place before I even place the order, okay? And this is a fill or kill order, which we defined in the article we just wrote. I want to put all this in place before I actually place the order, so I make sure that it's all done at once. I want all my T's crossed, all my I's dotted. So I want to take profit at either I could pick an exact value that I want to take profit at. So I could say I want to pick a target of $12,000 if I'm optimistic, or I could say I want to pick a profit of the actual amount of money I make as the value, okay, or as the target. So say I want to make 25%. So I could pick that. It's going to calculate how far price would have to move for me to make that based on the leverage that I'm using. But then I want to pick a stop loss, okay? I want to pick a stop loss. Looks like price is moving up against us. I want to pick a stop loss, okay? And I have two options here, okay? I could pick a stop loss based on an actual value in terms of market value for the price, or I could pick a stop loss, this is an interesting feature, based on how much I'm willing to lose of the initial margin I put up, okay? So mind you, if I place an order that a stop loss that is 5% away from where we currently are, it's not 5% of my initial margin I'm going to lose. It's 5% of the notional value of all the contracts, and therefore it's going to be much more than 5% of the initial margin. So rather than do that, I could just pick, I want to only lose 5% of the initial margin I put up. This is not something that I recommend, but then it'll show me the calculation based on that. But say in this case, I want to put the stop loss right below the market structure if I'm using a structural stop, and our entry is right around $11,000. So let's just say I want to give this a little bit of room to breathe. I'm going to put it at 10,900. So I'm going to place this order right now. It's obviously not going to get filled because we are at this point a little bit extended, okay? But this order right now is on the books, okay? Well, rather actually, this is fill or kill, so I have to change this, okay? Post only, okay. Let's do that again. So we're going to do the same thing. And since this was not filled already, it was killed. It was canceled. Okay, this is good for large orders. So again, let's do the 25%. Let's do the target of the stop loss of 10,900. Okay, let's confirm this. And now you can see that this is actually marked out on the chart. So our order is down here. Okay, when our order is filled, our stop is going to be here. Okay, and right from here, since our order is just active, none of this is going on right now. We don't have the stop in place until this is filled. But the stop will come up and the take profit will come up as well. So to show how that works, I'm going to use a market order. So I'm going to cancel this order right here, cancel the order. This all happens very quickly. I'm going to go to a market order, which is going to give me the best available price. I'm just going to buy the same amount of contracts, but the books are fairly liquid, so it's not going to give me any problems in terms of slippage. I'm going to buy long again. Okay, I'm going to be buying at market right now, though. Okay, so I'm going to be buying at market. I could essentially buy at limit right now and watch price go right through it and likely fill it, but I'm going to buy at market right now. Okay, 10 times leverage long. I'm going to be doing a take profit again, 25%. Okay, let's get greedy actually. 50%. My stop loss, same thing. I'm going to say 10,900. Okay, right now this order is going to be filled though, immediately. So 10,900, and now you can see how this works. So my stop loss is listed, okay, listed right below, all right, and my take profit is going to be well up there, okay. So this is one of the incredible features. All this gets done at once, all right. Now this is a conditional order type, okay. So these I have to actually, well, this is actually opened rather. This is conditional, my conditional orders, right. I could change these right now. Okay, I could change this order. All right, if I want to change the stop loss, I could change the take profit. I could do both of these things on the fly. I could eliminate them. And I can also order use a trailing stop. So if I want to use a trailing stop instead, I want to base on like a volatility stop, price jerks down 30 bucks, I want to be out of it. I'm going to confirm, it's going to change this. And then now you're going to see this. We're going to go down to 3 minutes to see how that looks. Below the current price at $30 below is going to be my stop. Okay, this is going to trail this movement, which is good for trend following, for volatility stops. There's a lot of uses for all of these stops, and a lot of exchanges don't offer the depth of tools that Bybit offers. So very useful. Let's get out of this trade. Okay, we can either limit exit a trade, okay, or we can market exit. So I'm going to market exit this trade right now. Okay, I can close all of my position or I can close a portion of this. This is great for if you're going to be taking profit as you move up. Okay, more important to take profits as you move up. So a very useful exchange. All right, in terms of ease of use, rather ease of use. Conditional order types. Okay, I could set triggers. I can use the good till canceled, immediate cancel, or fill or kill. Trigger price, obviously. These are important if I do not want to enter until certain parameters are met, or rather certain criteria is met. So this is how you're going to be going about placing a trade on Bybit. All right. The great thing about Bybit, it converts everything to USD, so it's easy to identify, how your trades have worked. So in the case of this brief test net, you can see that we just closed these trades out, and it shows us, our closed P&L, our exit type, all this information that would be useful for logging your trades. One more useful thing about this, okay, is the fact that Bybit offers USD pairs for ETH, EOS, and XRP. So it's not just the XBT, XRP, not just the Bitcoin ETH pair. Bybit trusts USD. It doesn't trust Tether. It doesn't want anything to do with that. It uses USD pairs, which is extremely useful. Okay, so this exchange is a phenomenal exchange. It gets my thumbs up. Using it is very easy. When it comes to leverage, a lot of people are scared away at the idea of using leverage, but it's really important that like all trading, you have to have a system in place that defines clear exits if your trade is invalidated. And so when it comes to leverage, like any other trading, risk mitigation, risk management is the focus. All right, so we spoke about in the article how much trades need to actually move adversely against you. So if we were, for example, looking at taking a high leverage trade, looking at this right here, this is not an area where I'm looking to take a higher leverage trade. Judging by the extension of the current price, judging by how much longs are actually paying in funding, there's a few things that I could judge. I could pass judgment on, rather, to decide whether or not I want to place a high leverage trade. And one of them for sure is our location relative to certain areas of market structure, such as support, resistance, or whether or not we're sitting within a range, or rather whether market has a certain intraday volatility, or rather an intraday range that would not be suitable for opening up a higher leverage trade, because just noise alone would likely take me out of the trade. So there's a lot of ways you could go about incorporating leverage into your whatever trading system and style that you have. And like I said in the article, it's going to be a lot of your decision making should be based on the conditions of the market. So you'll see a lot of people posting their P&Ls for high leverage trades, but all the market has to do really is move against you slightly, because you're not going to get liquidated at the actual liquidation price. You actually get liquidated a little bit beforehand. So that's that. So this is a phenomenal exchange, very easy to use. All right, if you have a system in place that is showing some type of positive expectancy, use Bybit's testnet. Okay, get a feel for the exchange, and then using leverage is very useful. Okay, if you're trying to hedge your overall spot positions, if you're trying to take advantage of both sides of the market, and if you are trading effectively, and you feel like you are confident, then in times like this, where we're in a bull market, applying a healthy amount of leverage, such as 2 to 3 times leverage, can make a massive difference. If we're talking about just buying dips, okay, if we're dip buyers in bull markets, right, and we're buying any kind of substantial dip, then we could use 2 to 3 times leverage, because price has a considerable amount of space to move. All right, we're talking considerable amount of space. If I'm using 2 times leverage right now, let's say I'm using 2 times leverage, just to give you an idea of liquidation, rather 3 times leverage. So I'm using that amount, and let's say I want to use that for 2,000 contracts, rather. Okay, so I'm just going to buy at market right now and see what happens, just to see how much actual space I have. So at $11,079 at 3 times leverage, price would have to move down basically $2,500 or $3,000. So you have a lot of breathing room. Okay, for trend following systems, for momentum systems, for markets like these where you're buying dips, adding a little bit amount of leverage can go a long way. So as I always say, exercise proper risk management. But I give my thumbs up to Bybit. Josh does as well. It's very easy to use. And if you have any questions, always feel free to ask us. All right, guys, it's been a pleasure. This is Ryan, Cantor & Clark, and now of BlockRoots. Signing out, as always, exercise proper risk management and trade effectively.